One financial misstep cost him over $4 million. But for millionaire Jamie Rogozinski, that actually wasn't his biggest regret. For the first time ever, Jamie is sharing his true story and how this experience ultimately led him to Stansberry Research's crypto expert, Eric Wade. Learn how digital cryptocurrency and blockchain technology could change the direction of your financial future in 2022 and beyond with Eric's free copy of his new report. In it, he shows you why Bitcoin has proven itself as an excellent store of value in the long term. You'll want to see why this is more important than ever as inflation reaches 41-year highs. Plus, the name of an important asset, not Bitcoin, that everyone should own immediately before it revolutionizes every business industry in the world. In short, today as many as 89% of Americans are getting left behind. If you don't want to be one of them, you owe it to yourself to discover the best way to begin. Simply go to leftbehindreport.com to get your free copy. Again, that's Left Behind Report for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. We are catching up with Garrett Goggin. He is the editor for Stansberry Research's Silver Stock Analyst. Garrett, always good to be with you.
Hey, Danny. Thanks for having me. Nice to see you again.
Yeah, well, I'm happy to see you and cover a lot of ground with you today. I want to start by talking the Fed. Now, we saw the impact their last rate hike is having on gold, silver, and especially the crypto complex, leading many to think what's going to happen in June. Could we see another rate hike? And how much more damage could this do to these assets?
Yeah, Danny, I tell you what, inflation, we see it everywhere right now. So the Fed's forced to raise interest rates, and they're going to keep raising them until the economy falls apart. And you know what? If you look at a chart of the Fed funds rate back in 1980, it was at 20%. They hiked rates in 1989. The highest they were able to get them was 10%, and the economy fell apart. In 2007, it only got them to 5%. Each time we've had a rate hike cycle, they've only been able to increase rates half as much as what they had before. In 2019, they got them as high as 2.5% before the economy fell apart, and right now they're at about 1%. So, they're probably going to raise rates one more time. Economy's going to, tip in a recessionary cycle. They're going to have to start easing at that point and start providing stimulus. And then if you look at their Federal Reserve, their balance sheet assets, it's still $9 trillion. They haven't even stopped any purchase of that. If they stop purchase of that, the economy is going to fall off a cliff. Yields would spike up. So they haven't even started doing that yet. So we're looking for one more rate cycle and one more rate hike, and that's about it. And regarding the effect, I'm a silver analyst, Danny. There hasn't been a better time to buy silver and silver stocks in the past 10 years than now. Silver stocks, they've sold off about 30% over the past month. This has only happened 4 times before over the past 10 years. Every time that's happened, the silver stocks are basically up 50% to 100% over the next year.
Just going to focus a little bit more on the Fed before we dig a little deeper on silver prices. Former Fed Chair Ben Bernanke came out earlier this week saying that the Fed made a mistake moving so slow on inflation. Not sure if what you think about his comments there, Garrett.
Well, the Fed, they've been talking about raising interest rates for a long time before they actually started raising interest rates because, if they just raised interest rates before letting the market know that they were going to do it, the market would have been major league spooked and it would have tanked. But the equity market is the economy. Everyone's retirement is tied to the equity market. When portfolios are high, consumer spending's high. When portfolios sell off, the consumer spending decreases and slows down the economy a little bit, and that's what the Fed wants to do. But if you look at previous cycles too, 20% off the top is where the Fed starts easing off the gas. And right now, the S&P topped at about 4,800 and it traded down to about 3,840. That's 20% also. So
Yep.
we're at a point where the Fed's going to start taking their foot off the gas.
It's interesting you say that because I think it's such a mixed camp between those who think that the Fed has to keep raising interest rates. I had E.B. Tucker on who kind of echoes the same thing as you do, saying they're just not going to be able to keep doing this.
Right.
But I guess my question is, let's say if a recession does get triggered, would that
Yeah.
be, then what happens to gold and silver prices?
Well, one thing regarding the rates is I just saw something today. It says they have to raise rates, above the real rate, and that's never going to happen because inflation's 7% right now. They're never going to be able to raise rates at 7%. Everything would fall apart. But all that matters is whether the Fed is in a tightening bias or a easing bias. So if they back off, whether economy's in a recession or not, it's going to be good for gold and silver prices because inflation is going to continue. The Fed can't continue raising rates to bring them as high to fight inflation as what they should be able to. And I listened to that EB interview, and I agree with him. That a lot of people out there, they're worried about a deflationary collapse. Like, it's never going to happen. Why? Because the Fed can print as much money as they can. They can buy as much assets as they can. What's going to happen is a huge inflationary spiral. That's what they choose because asset prices are going to go higher, housing prices are going to go higher, portfolios are going to go higher, everyone's going to feel richer. The Dow's going to be at 100,000, but a bottle of Coke's going to cost $20, and that's the end game.
Let me ask you, let's talk gold and silver prices here because as we're speaking, gold prices have plummeted nearly 12% from the relative highs on March 8th, while silver officially, some would say, has entered a bear market with a drawdown of more than 20%. Is silver in a bear market right now?
Yeah, technically silver's in a bear market right now. But, like I talked about the Fed funds rate being cut in half, it went from 20% to 10% to 5%, 2.5%. The price of gold during those rate hike cycles has basically doubled every point along the way to it. In 1989, it was at 400. In 2007, it was at 700. In 2019, it popped up to 1200. Right now, it's at 1800. So next time the Fed takes its foot off the gas and starts easing, we wouldn't be surprised to see gold, well north of $2,500 an ounce. But along with the rising price of gold and rising inflation and Fed powerless to stop it, the costs for the miners have increased also. So
Yep.
some of their profits are down. Like I've just looked over the past 5 years, their costs have increased like 20%, and that leads into the next thing that I kind of want to talk about regarding investing in gold miners and silver miners. You need to find the profitable ones, and the way to find profitable ones, you need to find the really high grade ones because to mine a ton of ore, it's basically fixed cost. But if you have extremely high grade, you're going to get more ounces out of it. You're going to be more profitable. So a lot of people like these lower grade miners because they think the price of gold is going to spike to 2,500. I'm going to invest in these lower grade things. But you know what? The costs keep going up. And when the costs go up, they keep losing money. And then the way that they plug that gap in their balance sheet is they issue more shares, and it's dilution, and they never get caught up. And the share is in a perpetual cycle of decline.
Okay, let's just focus on the miners a second here now that we're talking about it. Let's pull up first Majestic's
Yeah.
chart. This is a miner you track closely. You have said, though, they need to get Jarrett Canyon moving to turn things around.
Yeah, I tell you what. First Majestic, when gold and silver get rolling, First Majestic has the highest beta to gold and silver out of all the miners in the industry. First Majestic, it's extreme leverage on the gold and silver price, and they've done a really good job over the past few years increasing their exposure to high grade mines with their acquisition of San Dimas from Primero, Santa Elena. They got Ermitano ore being piled in there, like what is it, 400, 500 grams a ton. It's really increasing the grade there. But they acquired Jarrett Canyon from Sprott a year ago, and it's a refractory ore. I actually went there, visited there, so it's higher cost because they got to use these roasters. They need to get costs down there at Jarrett because it's a drag on their profits right now. Because right now, Jarrett, their costs are about $1,400 an ounce, all in sustaining. They're not making money there, but they have a plan in place. And if they're able to switch that from a money-losing operation to generating profits, the stock's going to do extremely well.
Another miner you like, Mag Silver.
Yeah,
Let's talk about this company and why you like
Yeah,
them.
I want to talk to you about this because I've covered mag for a while. But the thing that's interesting here is, Peter McGaugh, world famous silver geologist, found the deposit in his first drill hole in like 2004. It's finally coming into production. Fresnillo is their partner, and Fresnillo is a Mexican company. and they're helping mag. They're processing mag's ore right now at their Saucedo mine, and their results are coming out, and they just came out with the first quarter 22 results. And see, this is exciting for me because I think due to the price of silver getting whacked and price of gold getting whacked, that like this fell through the cracks. No one even noticed this. But the average grade for that came out during that first quarter was 656 grams a ton. Silver equivalent. The average silver mine operates at about 200 grams a ton. This thing's a beast. This is the best silver operation I've seen since Escobal with Tahoe that eventually sold out to
Okay.
Pan American. Yeah, it's huge ore body. It's extremely high grade. It's extremely profitable. And the beauty of these high grade operations, doesn't matter whether the price of silver is $15 or $25, they're still making money hand over fist because they're producing so many ounces. Their cost per ounce is under $10. I think it's about $8 per ounce based off that report that just came out. So yeah, we're excited about
Okay.
that one.
I know you're one of the few precious metals guys that also covers or metals in cryptocurrency. So I want to get your thoughts on Bitcoin.
Yep.
Given the pressure we've been seeing on the cryptocurrency space, are you still a believer?
Yeah, I'm glad all the alts got whacked pretty hard because I think they're basically all worthless. The only thing that matters with crypto is Bitcoin because it's proof of work. And when you think of money, what is money? Money is stored energy, and that's why gold is such a great store of wealth because it takes so much energy to get it out of the ground. It represents stored energy, and then Bitcoin, no doubt, is stored energy. It takes a tremendous amount of computational power to crack the code in order to get rewarded Bitcoin. So that is saved energy too. The thing that necessarily is not saved energy is the U.S. dollar. If you have a printing press and you can print it out at any rate that you want, it's going to lose its value over time, which is what's happening now. So I'm happy that there's been a washout in the altcoin with Luna, Terra Luna, and all that because they're not decentralized. They're basically all centralized. It's proof of stake. And they're all pre-mined, and there's so many venture capitalist deals and people making money or used to make money hand over fist, and they're not anymore. So yeah, I see Bitcoin as a store of value like gold, and I see stores of value that are they're going to continue doing well over the future versus the U.S. dollar. That's a shitcoin.
So, Gary, just want to bring up last time you were on, you said that China was looking to diversify trillions of dollars into commodities that are outside assets, which will send them through the roof. Is this taking place now, would you say?
Yeah, no doubt, it's still happening. You still have the Hong Kong episode that is going to be coming up in the future, and the U.S. showed its hand what they're going to do with countries that don't abide with their foreign policy, like Russia, and they're planning to do the same thing to China if when and if China decides to go in and take Hong Kong. So China's preparing. They're buying tremendous amounts of copper. Copper inventories are at a low. If you look at the futures commitment to traders and stuff like that, we're finally in like a really good spot, for metals prices, for copper, for silver, for gold. The small speculators are negative. The commercial producers are, positive. This is the first time that it's occurred, basically over the past year. So regarding sentiment, commitment to traders, diversification away from the dollar, it's still ongoing. It's a long-term process, and yeah, it's going to continue.
I guess my final question to you as we wrap here, Garrett, is just going back to the Fed and your point that you really don't think we'll see another rate hike after the June meeting. But do you think the Fed cares about optics then? Because what kind of message would that send that, hey, we're going to do everything possible to combat inflation, we're raising interest rates, to all of a sudden just do a 180, halt everything, reverse course, and start doing quantitative easing again?
Well, they hike until the market falls apart. So the markets, a lot of the high flyers have already fallen apart. There's a tremendous amount of pain in the high tech space. And they're going to continue hiking until the market falls apart, and they're going to be forced to provide liquidity through the repo lines, and what we've seen before, and that's not far off, unless they back off, and they're going to be forced to back off. And then regarding optics, the CPI, they've changed the way they've calculated the CPI every year over the past 10, 20 years to make it appear that the inflation rate is a lot less than it actually is. So I don't know, maybe they'll change owner's equivalent rent and, make it look like, rent hasn't increased so much. But, like I said before, bottom line, people are much happier when their equity portfolios are up at new highs. They're much happier when their real estate prices are up at new highs. It
Of
reduces the
course.
amount of net debt that's outstanding. People spend more. People feel better that way. Yeah.
Well, no president wants high inflation or a doomed stock market. And right now, you have a lot of unhappy
Right.
investors. So the question, going back to your point, will the Fed only take it so far,
Right.
especially before the next election?
Correct. That's the way I see it. They're definitely going to err on the side of inflation versus tanking the entire market and having people not
Yeah.
open their brokerage statements and wanting to, vote for the next a different party than what they voted for last time.
Garrett Goggin, it's always good catching up with you. Thank you for coming back
Good.
on.
Awesome. Thank you, Danny. Nice to see you.
All right, we'll see you soon. And thank you so much for watching. We'll have much more coming your way, so be sure to stay tuned to Stansberry Research. And don't forget to sign up at danielacamboni.com so you could stay on top of all the latest interviews coming your way. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.